Good evening, ladies and gentlemen. Welcome to Reference Point. I'm your host, Dave Coker-Hook. This evening, we're going to talk about something that we haven't really discussed here before on Reference Point. And to do so, first I'm going to introduce my guest. I have with me Rick Braunstein, who's the managing director of an organization called Control CFO. He's a longtime financial expert. He's been a CFO of other corporations. And he's here to talk to us today about something that's changing in the way accounting activity is managed and monitored and reported for any kind of business. So if you own a small business, or you're an executive in a big business, or you work for a business, then you're going to be impacted by the things that we're going to talk about today. So Rick, thank you so much for being here at Reference Point. It's a pleasure to have you on the show.
Thank you very much for having me.
So a little bit of the start of that indicated that we're going to talk about accounting standards. So the thing that I was always interested in is who sets these things. I've known from interacting with businesses over the years that there are certain ways that things are supposed to be done when it comes to accounting. And what I mean by that is, like, if you're going to do a financial statement, you have to do it in certain ways and stuff like that, and how you track data. Who sets those kinds of standards? Where does that come from?
So the standards are called Generally Accepted Accounting Principles.
Okay.
And in the U.S., it's called the FASB, Financial Accounting Standards Board.
Financial Accounting Standards Board, FASB. Okay, I've heard that acronym, FASB,
Yeah.
FASB, okay.
And the most common place outside of the U.S. is the International Financial Standards, or IFRS.
Okay.
And those are probably the two biggest groups that set the standards on which we all prepare the financial statements, pull the numbers together.
Okay, and those standards are important, I'm guessing, because if you're a business owner and you want to go get a loan at a bank, you need to represent to them the kind of revenue you have, the money you make, what your sales are, and what all your expenses are, so that they can see whether you're making money or not making money in your business, right?
And if you are a business that makes things, then you have inventory.
Right.
If you're selling something, then you are billing a customer, and so you have receivables. And so yes, all of those pieces make up the financials, and if you're going to go to the bank, you're not just going to have a set of numbers, you're going to have an explanation of those numbers. We call them footnotes.
Right.
And so if you have, I just have brought an annual report from a client, but if you looked at this, there's maybe 4 pages of numbers and 20 pages of footnotes.
Right, yeah. Right. But the key thing is here, the numbers are important. I think a lot of people, I've worked with a lot of entrepreneurial business owners over the years. Guys and gals who have started a company, and whatever it happens to be. It could be anything from a software company to an automobile body shop or whatever. And initially they say, oh, okay, I just I charge people, I take in the money, and I report my taxes. But it isn't quite just as simple as that, is it? I mean, there's a lot of those numbers are important for a lot of different reasons. And if you're not aware of what those numbers represent, you can be at a disadvantage as a business owner. Is that an accurate statement? Absolutely.
For most companies, it's not just your checkbook, right? It isn't I pay some bills and I report my taxes like you might if you were an individual filing your tax returns.
Right.
For most businesses, you have to follow a set of, call them standards, right? And so you don't necessarily record something as, taxable when you collect the money. You record it when you've delivered on your responsibilities. And there's a whole, and so when you get into that for the various areas, whether it's sales that we're going to talk about, or it's inventory or some other pieces, there's a whole lot of things to consider, and it makes a whole lot of difference.
Got it. Well, cool. So the things that I wanted to talk about today was this thing that's referred to as Accounting Standards Code 606, okay? And what actually I have a graphic up that we're going to pull up. It's about, there was an old standard 605 and a new one 606. What is this 605, 606 stuff, and why is it relevant to what we're doing here? If I were a small business owner, what would it mean to me?
So if you think about how big are you, that people are $10 million companies, or they're $1 billion companies, or they're $300,000 companies. And so under 606, we're now redefining how big you are.
Oh, that's interesting. Okay. Tell me more about that. How does that work?
So let me give a little bit of history, not to bore everybody, but several years ago, maybe 10, 15 years ago, the accounting standards groups got together and said, wouldn't it be nice if we did it the same way all around the world?
Sounds reasonable.
Right? So if you had a financial statement in Japan or in Brazil or in the United States, all the number, it meant the same. And
that kind of thing seems to make sense when you look at the globalization of economic activity, and how companies, even smaller firms in any part of the world, are doing business with other parts of the world. So I can see how that might make some sense.
Yes, and so to have this consistency, they initially tried to come together and create one set of standards. Ultimately, there's a lot of choices you have to make, and they couldn't agree who would make the final choice.
Ah, okay.
So Plan B is, and I've been talking about sales and inventory, and you lease buildings and that. And so what they decided is, let's do these separately together. And 605 is the old way that the U.S. did revenue sales. Mm-hmm. 606 is the new way that we did in conjunction with the IFRS.
Okay.
And virtually the same. So they worked on this for a lot of time, for years, to sort of work out all the details. And if you looked at the new standards that we have in the United States and what they have in the rest of the world, they're now virtually the same.
Okay. And why does that make a change? You said it might change the way that you look at what size company, or when you say what size company, that implies to me, what do I report as the amount of earnings that I have as a business?
Right.
How does that change that reflection of what have I earned as a business?
Yeah. So I'm going to pick on a phone.
Okay.
Right. So under the rules, the current way of doing it in the United States, there's, when you sell a phone, let's just say this is a really nice smartphone, you sell it for $1,000.
Uh-huh.
Apple or T-Mobile or Samsung, they might be taking $50 into sales every month.
Right.
Even though most of what you sold is the phone.
Because they have you on a contract for X period of time, right?
2-year contract, 3-year contract, and they give you other things. And rather than try to separate these performance obligations out, they just sort of blended them all together under the old rules. In the U.S., I call it rules-based, but when you sort of cross the T's and dot the I's, mm-hmm. Even if the result doesn't make a lot of sense, right? Like recording $50 a month when I basically sold you a $1,000 phone and probably $800 was real phone value, mm-hmm. You couldn't get in trouble, right? If you think about our legal system and our tort system, if you cross the T's and dot the I's, it didn't much matter what the numbers were. And so over time, the U.S. evolved into what I'll call a set of rules that basically pushed out revenues as long as possible and took all the expenses in the beginning.
I can see it. I've worked in the software industry for a long time, and I can see how that phenomenon works out. How you don't want to say, I made the money today. You want to kind of leave that in the future and take as much in the way of expenses, because that then reduces your tax liability now today. So, and what I'm understanding you to say is that, hey, this is the way we kind of built the system here in the U.S., so it was okay because everybody was following the guidelines and no big deal. But you're saying that that's changing now with this new 606 standard.
And so the new 606 standard is principles.
Principles.
Right, and so you think through, there's a 5-step process, mm-hmm. right, and you think through what makes sense. It is a far more logical matter. It's going to be, I think, in my opinion, in the end, a very good thing when we get a few years out
and we're through
the transition.
Okay.
Right.
I've got this one thing. You mentioned principles, and let's go to the second slide of that, because you had a definition that you showed me earlier. Revenue will now be recognized when performance obligations are completed, which is different than what it has been. Can you explain what we mean by performance obligations?
Yeah. So you need first a contract.
Okay.
And
like, again, let's go to the phone thing. So I have a contract for the phone. I sign a contract. You sign a contract for the phone with T-Mobile or whomever.
Yeah, and over time, I might have a series of contracts, right? Because I may, a lot of them will give you the rights after a year. You can turn this in and get the newer phone.
Right.
So I've got a change order, if you would. Right. So under the current rules, 605. You just take the phone, you take all those changes, and you just spread them out over time. It's easy, right? And you create this liability, in theory, on the balance sheet called deferred revenue. So if you know software, a lot of people have heard of deferred revenue.
Which means I'm not going to recognize the fact that I've earned some money until sometime in the future.
Even though I've been paid.
Even though I've been paid, right.
Right. Now, if you've done the work, so you've met the performance obligation. Right, so let's just take that phone with a right to turn it in a year. Most of the value is in the phone, right? And so I met that performance obligation. I take that as revenue on day one.
Ah, okay.
Right.
So that means that the company who sold me the phone, instead of saying I'm going to take $50 as showing on my books that I've made $50, I have to show that I made $1,000.
Yeah, or maybe
whatever
$800.
The number is relative to the thing.
I have some other rights I'm giving you, and I have to figure out what those are worth. And so I estimate them. And so from the point of view of the financials, the other slide you had up talked about the length of footnotes. Revenues have always been complex, and if you looked at an annual report, you'd find them to be several pages long.
So for major corporations, that's frequently the case. But for smaller, medium-sized companies and small non-public corporations, I'm guessing that if I was a corporation here in the state of California, you can sign up as a corporation, but I'm a private corporation, not a public corporation, so I'm not selling stock or whatever into my company. And I take my financial statements to the bank to try to get a loan, or I've got somebody that's interested in possibly buying my company and they want to check us out. I have to provide them financial statements. Does this concept of footnotes, and which is explanations about what's in the values that you're showing, that what the numbers are. Is that thing about footnotes still pertinent and relevant?
Yeah, exactly. And the new rules, the new standards, are going to force you to have much longer footnotes, because all of these principles are going to allow you to use a lot of judgment and figure out what makes sense for my business. So
rather than saying, as in 605 says, these are the guidelines, follow the guidelines, check the box, cross the T, dot the I, you're good.
Right.
We'll figure that means that the numbers you're giving me are valid. What I'm understanding you to say is that now the business will have the opportunity to redefine what some of their numbers mean, and they support that by an explanation that makes sense for their business.
Yes. Can
that be challenged by the IRS or the SEC or anybody like that?
So typically, if you're at a point where you need to use those numbers for something, whether you're going to sell your company or you're going to get a bank loan, you're dealing with your auditors. So somebody has to determine that the decisions you made are reasonable, but they are your decisions. And indeed, one of the values and why I like 606 is if you don't like the answer you got initially, look at how you're running your business. And maybe you can make some business adjustments that let you show the numbers the way you think that makes more sense for your company.
Okay. So we've got everyone that's done this old methodology, the 605 methodology. We have this new way of doing things coming up, and I'm guessing there's a transition period. As a matter of fact, I have a slide here that shows something about the timeline, because you were telling me that that a lot of this stuff needs to be done by 2019. Is that correct?
For everybody.
For everybody.
Right. So what they did back, if you can look at the left, it started, they actually finished the 606 in 2014.
Okay.
And initially, they were going to allow you to start it in 2016. It's, if you look at changeovers on a scale of 1 to 10, this is a 10.
This is a 10.
So all the companies that are starting to finish now, it's probably taking them 4 years.
Wow.
If you took a look at a small company wanting to sell itself, that's typically a 9-month process.
Right.
This is probably longer.
To make that transition okay. So then, if everybody needs to be on the standard, is it at the end of 2019 or the beginning of 2019?
Well,
in 2019.
In 2019.
So if you have to be on the standard in 2019, and we're here in August of 2017, and it's taken large corporations a long time to do it, it sounds like people, if you own a business and you haven't been thinking about this, you need to think about this. Am I?
You are absolutely correct, and indeed, it is a long process for everybody, even if your numbers don't change a lot.
Why is that?
Because you have to go through it's this 5-step process to figure out what are my revenues and why are they this way, and to prove it to somebody. So today, this is, what else can I say? This is kind of the European way of doing things.
Okay.
All right. And if today you went and looked at a software company's financial statements in the United States, there's probably 15 pages of footnotes.
Okay.
Today, that same kind of company in Europe, probably 50 pages.
Wow.
And so we're now going to move towards that direction.
Which is the direction of explaining why I'm doing business the way I'm doing business, or I'm recognizing revenues and or expenses the way I'm recognizing revenues and or expenses. Is that
right?
Okay?
A lot more estimating is going to be under the new rules.
Estimating.
Right. So you have, a lot of times a business will cut a deal that says, I'll give you volume discounts as you buy more.
Right.
And then they recognize those at the time that they buy more. Now you're going to say, based on some logical assumption, history, whatever, other companies in my industry, I'm going to say, rather than if I'm selling you at $100, but you might get it for $80, I'm going to say, what is my actual average price? And that's the price I'm going to use. And I'm going to tell everyone in my footnotes why I chose $90 or $85 or whatever that was.
Interesting.
It's just one simple example.
It's funny. It sounds straightforward, but but in my head, it's feeling complex. Ladies and gentlemen, you're probably feeling a similar thing, but this is something that's going to impact you. So if you have any questions about what's going on here, send those queries into info@referencepointtv.com, and I'll get them to Rick, and we'll try to get your questions answered about 606, because this is something that's going to impact you if, again, you own a business, if you work in a business, because if the business isn't doing it right, there's some ramifications for them and they could go away. So let me ask you this. It sounds like there's a transition. You said it's not, it's reasonably straightforward, but it's not something that you can do in an hour. It's going to take a while, some period of months, and for some corporations, years to accomplish this. That seems to be a lot of hassle. What if they don't go through the hassle to make such a conversion? Then what?
Then everybody who wants to see their financials, they're going to be basically giving false financials.
Okay, that's a problem.
Yes. So if you're in one of these industries, we talked about software. Well, that's one where the numbers are going to get bigger sooner. We talked this deferred revenue gone. And so they're going to be, if they are paying tax now, they're going to pay more tax sooner, even though they don't have any more cash.
Ah, okay.
If they're one of those companies, let's just stay with software. But it's software, it's aerospace, it's construction. There are a half dozen industries where the numbers are going to change a lot.
Okay.
For everyone else, it's just a lot of work. I'll pick on poor old Walmart, but they were, everyone knows Walmart, right? And they have stuff.
Yeah,
so
right.
you say stuff.
All right.
And a year ago they came out and told the world, we don't think our revenues are going to change much. And my FEI, my financial organization, I was on a call with them, the chief accounting officer, and he said, I doubled my staff.
Wow.
Because of all the work you have to do to go through these 5 steps and think about what it is you're gonna make sense out of. And so, but if you're in one of these sensitive industries, just think about it. Let's just say your numbers are going to change, and they're going to go up 40% when you start this.
Right.
Tax guys are going to be interested, but what about the sales guys? What are you going to do with your commission plans?
Oh, yeah.
What about the HR people? What are you going to do with your bonus plans? The legal guys, I better go look at all my contracts that I wrote around my old rules and see what now I need to do with them.
Because it's not going to be grandfathered in, I did it the old way, therefore all these numbers are going to be under the old one. It's almost, you have to change everything you're doing about the way you're keeping books.
And I can tell you over time, if you're any size, 20 million. Somebody that's sort of outgrown QuickBooks. I can tell you that if you look at a sales contract and you look at another one of your sales contracts, there's a little bit difference between them because sales guys have done things.
That's right.
Under the new standards, you break all those pieces out.
Wow.
And so those become a big job. One of the challenges is you have to look at every sales contract that you've got outstanding during the period that you're going to be reporting in this transition.
Oh, how exciting is that? So most companies have some kind of financial accounting system. And there's a very small, one-man shops might have a shoebox, but most people are using something like Quicken or QuickBooks or Peachtree or some accounting system, Sage, whatever. Are the accounting software systems that are out there today structured in a way that can help people through this transition?
Yes and no. So for most of us, the answer is no.
No, okay.
Right. So since this is pertaining to all companies, right? Not all of them are big enough to have gotten a more sophisticated software system.
Right.
So you think about NetSuite or
GD
Oracle
Edwards or something like that.
GD Edwards or SAP.
Yeah.
They are all working on a revenue module that allow you to do what you have to do in this transition is you have to keep 2 sets of books.
And it makes sense. They're the big firms that are dealing with the global companies who probably have had to deal with this anyway because they've got the European division who has to account for information one way and the Americans who have to account for it another way. So they probably have that built into the system. But the guys here in the States that have been using QuickBooks to run their business, they're not going to have that kind of capability, I'm guessing.
They're not. And if you get any sense for the complications behind this, it's not something you can just do on an Excel spreadsheet. People who were thinking about moving up to that next level of financial systems, should be encouraged to go do that and then get that module and play with it, because it is the other challenge of these new modules are they're going to give you guidelines. They're not going to tell you what to do.
Tell you what to do, right? So I think the summary here is that the change is going to happen, and there's nothing we can do about it. It's coming, all right? And you have to have it done by 2019. But it sounds also like the initial shock of having to make these adjustments is where the pain is going to be felt for some companies, especially in terms of this revenue recognition. Do I show all those dollars today versus down the road a piece? But I'm guessing that that's going to level out after a little bit of time, maybe a couple of years or something, and then everybody will be back to business as normal. But in the meantime, it's going to be a challenge. So the folks that are watching this show who are involved in that smaller business enterprise, below the 20 million level, they've got to deal with this too. or anybody who has a business, where can a business owner go to learn about 606 and what they need to do to be in compliance?
Probably several places, but I mean, we are starting to work with their professionals. So if they go talk to their attorneys or their accountants, we're coming out and doing lunch and learns to get a few maybe similar businesses together that are in, I'll call them, these high-risk industries where the numbers are going to change a lot, and give them an idea about what to do. Because if the process is going to take even a smaller company a year, it's not like it's a year full-time.
Right.
But you want to get going, you want to get planning, you want to look at your preliminary results, talk about the financial software, you want to figure it out. If you're going to start having very different numbers, you want to get other departments in the company, other professionals involved to deal with the commissions. And I had somebody ask me, I'm thinking about selling my company. A lot of companies have earnouts.
Oh, right, yeah, right.
Well, earnouts are kind of like commission plans or bonus plans.
Right.
How are you going to do that? It's not like there's a right or wrong way, but you got to sit down and think about it. And
it's really interesting because the way that stuff has been operating. I've talked to a lot of people in the M&A mergers and acquisitions world. I've worked with a lot of bankers in my time. I've worked in the software industry, in the factoring industry, and all of that. And so there's this, okay, this is just the way we've been doing things. We've been doing things this way for decades. Right. And now all of a sudden it's like, oh my goodness. And there's a tendency to not deal with those issues until they're just about to run you over. Yeah. And so I guess what we're saying here is we got to take the bull by the horns, recognize that there's something going on and we got to deal with it. We have maybe 30 seconds left in the show today, Rick. So is there any quick summary statement you have?
Those who plan in advance are going to like the results.
Cool.
Right? Because if you wait to the very end, you're stuck with whatever you have, and this is a new way of doing things that allows you to use a lot of judgment.
Got it. So cool. So plan ahead, take this into heart, check out some information on 606 online. I think we have Rick's website we showed a little bit earlier too. You can check with him if you need to. And so Rick, thanks so much for coming and sharing this information with us. It's important data. Hope the folks who have been watching have learned something. I know I have. And ladies and gentlemen, we'll see you next time on Reference Point.